Understanding a forbearance. I'm Chris Spade at Keller Williams Realty. We're going to go over exactly what a forbearance is and the three different types of forbearances that we're seeing in today's market. Now, a forbearance is when the servicer of your loan is giving you the opportunity to temporarily stop making payments on your mortgage. Now, make no mistake, those payments must be paid back because right now the bank is still paying the servicer for those, and the bank and the servicer are going to come back after you for those missed mortgage payments. So I wanted to discuss with you the three different ways that we're seeing repayment plans being structured so you can understand exactly what you will be getting when you sign on the dotted line. Now, if you watched the previous video to this one, you know that there are 3.8 million Americans around the United States who have gotten a forbearance on their mortgage. They needed the help, so they had to temporarily stop the mortgage payment. Now, that means 3.8 million loans are not being paid on right now, and there's 3.8 million people who are going to have to make those payments back. So restructuring those is going to become extremely important. Now, I can tell you for sure, without a doubt, there are not, I repeat, not enough people at the banks to make sure that you are going to get the restructuring that you want. So you need to know the most three popular ways the banks are allowing you to repay back your loan. And let me tell you, the banks really have no interest in making sure that you stay current with your mortgage because they're just going to take your home if you're not careful. So I want you to understand the ways you can make those repayments back before you sign anything on the dotted line. Now, the first thing that we're seeing, and this is actually the best thing, is if the bank, the lender, goes ahead and takes your missed mortgage payments and tacks them on the back of the loan. So, for example, if you have 15 years and 6 months left to pay your loan, you will now have 15 years and 9 months to pay back. Let's assume that you're just going 3 months delinquent. That is the most desirable way, and some lenders are doing that. Not all, but some. The second way that we're seeing that lenders are requiring the payments be paid back is over anywhere from 6 to 18 month period. So what that looks like, the 3 missed months that you made are going to be divided over the next 6 to 18 months. So your mortgage payments for 6 to 18 months are going to be higher than what your normal mortgage payment is. Because like I said, all that stuff has to be paid back. So that's not as desirable. However, if you can make that payment, it's actually a pretty good option. Now, option number 3, and this is the least desirable, and this is the one we're seeing most, and that is that the lenders are requiring what's called a balloon payment. So your mortgage has swelled up like you're blowing up a balloon, and you have to make it in one payment. So what that looks like is, let's say you missed May, June, July. When your August payment comes due in 45 days, you're going to have to make all 3 payments plus the August mortgage payment, which means you're going to have to make 4 mortgage payments. If you don't make those 4 mortgage payments on time, the bank can start the foreclosure process. Now, if you have any questions about a forbearance that you might be in, please reach out to me. There are options for you. Now, keep in mind, most Americans around the United States, of those 3.8 million, they have equity in their homes. So that's really, really good. So if you are in a position that you do need to sell, you really don't have to worry about it because you're not really going into any default, because during the forbearance process, none of this is affecting your credit. For questions, feel free to reach out to me, 619-818-2992. Thanks so much, everyone. Hope you're having a great day. Bye-bye.